Funding for Market Journal is provided by the Nebraska Corn Board.
Growing more with less is the mantra of Nebraska's corn farmers, and they're using incredible technology to do it. Soil moisture monitors let them know when their crop needs water and how much. GPS systems eliminate overlaps in the field, saving fuel and money. New hybrids reduce the use of pesticides and increase yields. When you're talking new technology and innovation, Nebraska corn farmers are all ears. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, John Meuret describes harvest progress in Nebraska. Lee Schulz looks at the current inventory of hogs and pigs. Dave Aiken talks about a possible Syngenta lawsuit settlement, and Aaron Berger explains how you can assess your forage needs. John Meuret from Meuret Grain Company is our market analyst this week. The 2017 harvest is off to a slower than normal start across most of the Corn Belt. While Illinois and Indiana are ahead of their usual pace in soybeans, all of the major players are behind in corn. Heavy rainfall across Nebraska has slowed progress here. Several areas of the state received significant precipitation this week, including 3 inches in Grand Island Monday, more rain than the city has ever received in a day during the month of October. We talked with John Wednesday afternoon in Madison, Nebraska, and began by asking for an update on harvest in his area of northeast Nebraska.
It's really slow, Jeff, really slow. It's one of the most odd years I can remember. We start, we stop, we start, we stop, and looks like tomorrow we stop again. So
what do you think the crop looks like?
I think excellent. You know, so far the yield results have been good. We see beans that are all of last year's yield, and of course we don't have a lot out yet. We're maybe 5% out, so we'll learn a lot in the next week. Corn is too wet, so we really can't get a good feel on that, but the early high moisture corn guys have indicated that it's awfully good. So
the market doesn't appear to be phased by this late harvest though, right?
No, it's extremely sleepy. Yeah, I don't think you have a day go by that you get people excited about buying or selling it, and so you just set.
What's underlaying there? What's the reason for that?
Well, I think the end users are patient because they know there's a lot of crop there, and you get the farmer is patient because he doesn't really want to sell $3 cash corn. So I think we just get a standstill, and until we see which side blinks first, we're going to be here for a while.
One of the larger stories this week has been the shipping troubles to the east. Can you explain what's going on and why it's such a big deal?
You bet, Jeff. So the problem is it's a barge draft restriction. So it would be like if you had 1,000 bushel on your semi, and because the roads were soft, you could only haul 500 bushel. So to put it in barge terms, it was 1,000% increase in tariff. And I think at some point yesterday, they said there's 47 miles worth of barges backed up in the Ohio River. So it's a problem, and I think it's slowly resolved itself. Yesterday we broke a little bit. There is rains forecast for here in east, which will help refill those channels, but it is certainly an issue.
Corn and beans?
Corn and beans.
Going to?
It's all going to the Gulf, Jeff, and so they're trying to stem the program that we've got on the books, and we do not want to have anything happen to exports. We need every bit of exports we've got. So
the final customer for that would have been who?
Primarily Asia. So we're going to India, we're going to China. You know, these sales have been on for 60 and 90 days, and the Chinese so far have been patient, and there haven't been a lot of loading delays, but it's a big program behind it, so we need to keep them rolling.
Does the PNW become more competitive then?
They are more competitive, and of course it's about a 30-day transit, not 60. So if we get in trouble, and if the West can start harvest, we will move more beans off the PNW. But so far, they've been patient.
Meaning what? They can go somewhere else and find it, or they have enough in storage?
They can. I think they've got enough in storage floating in the ports, and then they've also got South America still willing to fill in some spots. And so they could change a corn boat to a bean boat out of Brazil or Argentina and still find it.
One of the other stories this week has been the focus on ethanol and the future of ethanol. You serve on the board of directors for an ethanol plant up here. What do you think the future is? I think we're fine, Jeff. I think we've had a good year, really good year in a lot of cases at these ethanol plants. We still have questions on what this administration is going to do related to the EPA. These rumors this week have moved the market. We've taken some of the shine off the apple, but
I believe that we're going to still stay with our 10%, 10 to 15% ethanol in the U.S. And how we arrive at that RIN credit, where we collect that at, is just going to change the market structure a little bit. I think overall we've still got some growth. Doesn't mean we won't have down months, but I think we're fine.
Tell me about profitability in 2017 so far.
It's been excellent, Jeff. I think you're going to see a lot of these plants have the top 2 or 3 years they've ever had in the last 10 or 15. So it's a good sign. I mean, I think we've had good exports in ethanol, good use domestically, and so I think we're in really good shape.
Crop report next week. What are the analysts expecting first, and then what are you expecting?
That's a good question. I think the analysts are expecting corn yield to drip a little bit, be a little bit lower. Beans maybe be here or a little higher. And I would agree with the beans. I think we're going to be here or a little higher. We've seen enough harvest results that I think we can support that. The corn number I actually think is going to be here, maybe a touch higher, Jeff. I just think we've finished the crop in August and September extremely well. You almost couldn't ask for a better finish. So we're going to learn a lot when we roll the combines in western Iowa and Nebraska, but I sure think it's going to be hard to take that corn yield down very much.
Tell me about your price forecast for corn.
That makes it tough. If I'm right on the supply and I'm right on exports, which will struggle, not just because of the logistic issues, but because of competition in the world, I think we're stuck for a while. I think corn's got 25 cents downside from here, 25 to 50. That's going to get tough. It's going to be a long winter, Jeff, but I think that's healthy. Get it down, get some acres out of production, and then we can maybe have some fun for next year. Beans, are, of course, have tremendous demand, but Brazil should have a good crop again. Maybe Argentina struggles a little bit with La Nina, but we need to go retire acres somewhere.
Right, I'll challenge you on that. And what are those acres going to go to?
See, that's a good question, Jeff, because we've added something like 180 million acres in the world in the last 10 years. So our annual consumption increase is about 2% a year, and our trend goes up about 2% a year. So what happens to those acres, and who's going to have the problem that we can go get that? Is it ethanol bailing us out? Is it exports? But you're right, I don't know what those acres go to.
Okay, I pulled you off subject. Your price forecast in beans.
I think soybeans are going to trade $9 in the futures to probably 10.5 at some point. I just think you see a typical rally in the next 2 or 3 months, a scare, if you will, out of Brazil. So that's where I think beans are going, Jeff.
Basis.
Bases are going to stay cheap. You know, it's a function of freight is expensive. We talked about logistics. You've got competition in the world. That all speaks to extremely weak basis. So I'm not looking for anything real strong in the basis.
Do you think the farmer's still holding a lot from last year?
He is. He's pared back a lot of it. I think he's made plans. He's gotten rid of some beans here late summer and early October. He's also dumped some corn late season. But yes, he's still carrying a lot, and he plans to carry a lot. And he should. We're in carries in both corn and soybeans.
Next week, Doug Simon from Trados will join us to look at the USDA's October crop report. We also have a look at hog markets this week with Iowa State Extension livestock economist Lee Schulz. As we noted in our analysis a month ago, market prices in the last half of August were extremely negative after what had been a relatively strong July. September, frankly, didn't offer any support. The October lean hogs futures contract set a new lifetime low last week and lost 10% during a month capped by another large inventory report. The USDA's latest quarterly numbers showed the highest total on record for the month and more pork on the way. We talked with Lee Tuesday afternoon and began by asking for his thoughts on September's estimates.
Not too many surprises in the current report. Actually, pre-report expectations, if you take the average of all analysts, peg the numbers, the headline numbers exactly. So looking at the all hogs and pigs, the breeding herd, and the market hog inventory. So I think when you look at not much market reaction as we were very much in line with pre-report expectations. You know, if there was a little bit of surprise, I think it's when you break down the market hog categories. The 120 pound to 179 pound and 180 pound and over, those were larger than pre-report expectations, up about 3.9%. Could suggest maybe slaughter a little bit larger as we get into October and November than anticipated, but overall markets didn't react much to it.
So beyond that time frame, is there any sign that producers are going to start to slow down?
I think what we're looking at is very much a measured, calculated expansion, breeding herd up about 1.2%, realizing that we'll get a little bit additional growth when we look at productivity. Pig saved per litter was up 0.7%, a little bit lower than what we've seen in the past of the 1.5%. But we've really seen the market grow as the infrastructure as the facilities have allowed us to, and the demand situations has allowed this growth to really support profitable prices.
Well, has 2017 been profitable so far enough this year that the entire year will be overall?
It has, and that even includes a return to, I think, red ink as we get into fourth quarter. First quarter of 2017, we're about a $12 profit per head. Second quarter was about $17 profit per head. Third quarter, $21, and then a return to red ink, about $5 loss here in the fourth quarter. So that would average us about $11 profit per head for farrow to finish production. As we get into 2018, it looks to be about $8 profit per head with profitable margins in the first three quarters, and then return to red ink around that $9 to $10 range in the fourth quarter.
Can you explain what impact lower feed prices and the possibility for lower feed prices into next year provides?
They've helped, but I think what we've seen in price changes has very much overshadowed any of the impact on feed costs. If you look at the first 7 months of 2017, we've seen about $61 per hundredweight on a carcass basis for farrow to finish, total cost of production. Lower corn costs, I think that's going to reduce it to about $60 per hundredweight, so about a $1 decline in that total production cost. But looking at prices have declined about $14 or so as we're projecting for the fourth quarter. So very much overshadowed by the lower prices than the decreased cost of production.
Well, when we last talked in July, I think, you said that the fourth quarter you thought we might see some bearishness. Explain how we've fallen and why.
And fallen we have. We've seen highest prices of 2017 was the third week of July. 88.48 was the highest price in Iowa, southern Minnesota. Over the last 10 weeks, we've dropped about $3 to $4 per week, and that's put us in about $54.61 per hundredweight, so that's about $34 lower. I think we have maybe started to level out a bit as the futures do suggest.
Do you think that will last into 2018, that leveled out, or at what point do you think we can start to climb higher?
I think we have the potential to see a bit higher prices into 2018. The reason I say that is futures markets right now are reflecting that, about a $2 higher price on average in 2018 than 2017. When we look at the fourth quarter here in 2017, I think we're in that $55 to $59 range. We get in the first quarter of 2018, 62 to 66. Second quarter, we're looking at about 71 to 75. Third quarter, 70 to 74, and then back down 57 to 61 for the fourth quarter of 2018.
Finally, Lee, can you describe what effect new pork production facilities opening up has provided for the industry, either locally or nationally?
So I think there's two ways to really look at this added capacity that we've seen in the industry. First and foremost, it really has helped mitigate that pent-up demand that we had for additional shackle space. As we got into the fourth quarter of the year, the last several years, we were at, near, or above that theoretical capacity, and that really precipitously drove down prices. We are in a much better situation here in 2017 than we were in 2016. So that's going to help prices in this fourth quarter much more for producers than we've seen in the past. It gives them a bit more leverage as packers are after hogs. Once these packing plants get fully operational, they will be chasing hogs to fill those plants, to spread those fixed costs over as many hogs as they can. Secondly, it does give the industry the opportunity to grow. But just because we've added packing plants doesn't mean we will grow. Profitability is going to drive that growth. And we've seen profitability, really, if you go back the last 52 months, 42 of those months have been profitable from a farrow to finish standpoint. 2018 looks to be profitable on an annual basis. So the incentives in the industry are for expansion, but again, at that calculated, measured level of expansion.
The USDA's pork export numbers for July show the fewest American shipments in 17 months. Totals for August were released at the end of this week after our taping. Syngenta says it has reached a settlement in a class action lawsuit in which plaintiffs allege the company's commercialization of new traits caused them economic losses. In June, a federal jury in Kansas awarded producers nearly $218 million Other state-based class action suits were scheduled for later this year into 2018. The plaintiffs have said in 2013, China began rejecting U.S. corn shipments because of Syngenta's new unapproved varieties. The settlement announced last week will reportedly top $1 billion. Nebraska Extension Ag and Water Law Specialist Dave Aiken joined us Tuesday to explain what Nebraska growers might be able to expect.
It looks like it's going to be $1.4 billion. Predictions at the beginning of this were anywhere between $1 and $3 billion, so it's at least within that range.
What does this mean for farmers?
Well, my own estimate is it'll be maybe 5 to 7 cents a bushel. The 1.4 billion could work out to 14 cents a bushel, but I'm estimating at least half of that will go for attorney fee and litigation expenses and settlement expenses.
And which farmers would receive that money then?
Well, if you got a letter telling you that you were in the class and you didn't opt out, then you're in. The people who signed up with another law firm to go a different way or something like that, they're going to have to see what they find out from their law firm. But for the people, the vast majority of the farmers would be in one of these classes, and so that's who's covered by this.
Give me a background of where we were with this lawsuit.
Well, we had the jury decision in Kansas in late June, where the jury awarded the farmers everything they asked for, and that I think probably heated the fire up a little bit for Syngenta to get this over with. And I think the settlement was announced on the day that the trial was scheduled to begin in Minnesota, which was going to be the second trial of the various state trials that were scheduled. Nebraska was scheduled for next spring, Nebraska and I think Illinois or something like that. So, but Syngenta decided they'd had enough. They could read the writing on the wall and said, let's do it.
Who determines the amount of money? Who says this is enough money for the class, we'll take it?
Okay, when part of the deal on the class action lawsuit is that if you elect to stay in, then you agree that the attorneys who are managing this lawsuit represent me and that they are authorized to make settlement agreements. And there was a committee of attorneys representing the different plaintiff groups from around the country who are actually a negotiating team. They were set up in March, and they've been working with a special master that's a lawyer appointed by the judge to kind of be the, kind of like the assistant judge overseeing the settlement negotiations. And so they were the ones who came out, with this settlement.
When would you expect to receive a check?
Well, it could be by the end of the year, but there's, the settlement committee has to, nail this down, get all the stuff nailed down, the details, and then they have to take it to the judge, and the judge will review it and then approve it or not. But assuming that it gets approved, then there'll probably be some kind of settlement process where people will say, okay, this is how many bushels I had and stuff, and but we'll know more about that later. But I imagine it'll be something like that. And I'm under the impression that Syngenta kind of wants to get this done, so it could be by the end of the year. But I can't guarantee that. It could be early next year, but I'm guessing probably before the end of the year.
What happens if you signed on to one of those other lawsuits specifically with a firm to go against Syngenta?
Then, well, you should have gotten something from them already, because this has been in the paper a few weeks, and so they would want to update you on where things are. If you haven't heard anything from them, I would suggest giving them a call to kind of see where they are in this, because they may have to negotiate a separate settlement with Syngenta. We just kind of have to wait and see on that. Anything else? No, I think it's we've got a higher degree of certainty about this than we had up to this point, and hopefully we'll get information about how it's going to play out within the next month or so.
For more background on Syngenta's earlier case in Kansas, you can view our interview with Dave in the June 30th episode of Market Journal. The October Nebraska Farmer shows Midwest Farmers Cooperative's new shuttle loading facility near Syracuse. The co-op received its first 100-car train in April, but this fall will be its first full harvest. The location's total capacity is about 3 million bushels, and manager Eric Worth says the site will have the ability to load a train every 3 or 4 days if needed. You can read about the new facility in the October Nebraska Farmer. Nebraska Extension's Aaron Berger says this might be a good time for cow-calf producers to evaluate the feed resources they have on hand for the winter. We talked with Aaron recently in the R.B. Warren Arena on UNL's East Campus and began by asking how farmers and ranchers should assess their needs.
So we think about the forage situation in Nebraska right now. We've certainly got less hay stocks available than we've had the last couple years. Pastures are often, in some cases, a little short, although the moisture we've had in late summer has benefited that. So as we go into fall and winter, I think people are looking at what their feed resource is on hand, thinking about how am I going to get to next spring, and really evaluating the options they have in terms of looking out to find some feed to maybe complement what they already have, and then comparing and looking at things like $3 corn or $100 a ton hay. How do I put together the ration that's most cost effective for the cattle I need to feed?
What have prices been like compared to, a couple of years ago?
So hay prices certainly are probably anywhere from $30 to $50 a ton, ahead of where we've been the last couple years. Nothing like what we saw in the drought several years ago, but still higher than they have been. The drought north of us is sure pulling forage resources to the north, and that's putting competitive options for people in Nebraska in terms of accessing those resources.
Tell me how you assess what you have versus what you might need.
So I think it's good to do a forage inventory, looking at what you have on hand in terms of pasture, what you might have on hand in terms of winter range, corn stalks, hay stocks, thinking about a budget, basically what do I need, what do I have between now and next spring, and what do I need to get to complement what I already have to make sure I get there in good shape.
Are you looking at specifically a specific forage or TDN? What are you looking at?
So as we think about feed options available, you want to first think about what do I have, and then what do I need to complement that. So maybe I need a high energy, high protein feed to complement some low quality hay, or I've got corn stalks and I need something to match that. Or maybe I have some high quality feed on hand and I want to look for something that really just kind of provides some filler to help meet the nutrient requirements. So it's really evaluating what you have, thinking about what the options are, and then pricing those on a price per unit of energy, price per unit of protein delivered to the operation.
Tell me how you factor in any losses that you might incur.
Yeah, so I think it's really important to think about not only thinking about what does it cost to get to the operation, but what's the storage loss that occurs. What does it cost me to deliver that product to the animal? And then in the feeding process, what is the loss that occurs? So we really want to get to a price per unit of energy or price per unit of protein delivered to the animal and actually then consumed by the animal. And there's a lot of different options available, and so sometimes some feed may be less expensive to deliver than others, provide some convenience, but has more cost, and so we have to weigh those against each other.
Concerned about less potential in some areas that might have had drought, especially if you're thinking about grazing or baling corn stalks?
Yeah, so I think we're going to have, if we think about corn stalks in Nebraska, especially dry land, some of those have been drought stressed, going to have less yield, which is going to translate to less grazing days available per acre. Some of the quality of hay might be a little less because it was drought stressed as well. So I think this is a year when we sure want to test feed, understand what we have, think about what we need to complement what we have.
What tools are out there that might be able to help producers?
So the beef website has a really nice tool in the feed cost calculator, and it's an Excel-based spreadsheet that you can download. Allows you to go through and compare those feeds to one another. Another app that's available at the beef website is the NU Beef Calculate app. It has the feed cost calculator on it. Works both for iOS and Android and is a nice quick way to look at options with feeds.
Now with this week's weather forecast, here's Nebraska Extension ag climatologist Al Dutcher.
Well, folks, here we again for the weekly forecast, and of course last week we talked about that big trough in the western United States slowly making its way across the state. Pretty much played out as expected. We received some pretty significant rainfall across much of the state east of the Panhandle. Some of the totals that we received have been in excess of 5 inches in isolated locations, but numerous reports of 3+ inches of moisture. That system is slowly grinding its way eastward, and the big question is, are we going to finally now get a period of time where we get enough drying that we can start to get back into normal harvest activity, as we're starting to fall behind in terms of where we should be in terms of harvest conditions. So as we go to the upper air models, the first thing we'll draw your attention to is that here's that trough that was a deep trough is starting to flatten out, and most energy moving from an east to west fashion. The main energy in the low pressure systems now bypasses as we try to get high pressure building into the region. So the vast majority of the precipitation that's left today will be across extreme eastern Nebraska, and points off to the east and northeast. And then we see as a Sunday, as the trough tries to dig, some of this energy splits off and it's going to move through the southern plains while another piece moves across the northern plains. We're going to kind of caught between these two systems here in Nebraska. It's going to be mainly high and dry. Not much moisture with that trough coming out so far out of the southern Rockies, but as it progresses into western Texas, we'll start to see the moisture increase in the southern plains as a series of upper air low pressure systems moves around that trough, and that will help to generate some pretty active weather over the eastern portions of the Mississippi River Valley, and we may actually see some moisture in the high plains of Nebraska. And then a quick moving shortwave moves through the region on Tuesday. High pressure quickly follows behind it. This is a one to watch. There does appear to be indications that we may see some freezing temperatures across a broad portion of the northern portion of the state, and there also is possibility of some light precipitation as that system moves to the east. On Wednesday, high pressure starts to build into our region, and we should start to see a warming trend and a drying trend in our region. It's going to take several days, of course, to dry out these wet conditions, but you can see we're fairly precipitation free, most of the moisture to our south and up over the Great Lakes. And as we get into Thursday, the ridge starts to build in even more, so our temperatures are going to come back up to near normal conditions. Do show low pressure down the Texas Panhandle, but really there's not a lot of moisture with this system. Very little of it will make it to the surface in Texas. Most will be in northern portions of Mexico, and then the center part of this ridge builds into our region on Friday, leaving us with the possibility of a very dry weekend next weekend, good for harvest activity, and temperatures moving back up to slightly above normal as we go into the weekend. Most of the precipitation stays well to our south. Now, as we go to the 8 to 14 day forecast, it looks like the ridging pattern will still remain consistent here in the northern and central Corn Belt, so we're looking at above normal temperatures. In terms of precipitation, the models want to hint at a broad-scale ridge across most of the country, keeping us drier than normal. However, the recent tendency has been for these systems coming in the Pacific Northwest, at least the last 3 storms, to move much quicker. So we'll watch to see whether or not this will hold and give us some opportunity to harvest crops, or whether we're going to have to endure another long period of inclement weather once we get in past next weekend.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, hog prices, Syngenta's lawsuit, and analyzing forage needs. As always, you can keep up with Market Journal during the week by following us on Twitter, Instagram, and Facebook. Next week, Doug Simon will look at the USDA's October crop report, and Jeff Gonzalez will talk about dicamba use in 2018. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.